Hello, today is Friday, July 19th, 2024. That means it's time for another episode of Stock Market Weekly. I am your host, Evan Medeiros, and this is the show where we cover all things financial markets through the lens of technical analysis. And this week, we had some volatility. How's everybody feeling out there? We got a little bit of a pullback. We've got some two-way trading. We've got stocks that are actually in correction mode and rotation underneath the hood. So let's get into the headlines here. Nasdaq 100 crossing a 5% pullback threshold. Pretty mild, all things considered, but clearly the action this week, depending on where you were positioned, felt a little more extreme or perhaps more mild. We're going to talk about that. Energy, real estate, financials, all up on the week. There is clear rotation happening underneath the hood. Bitcoin, just last week, right? What a difference a week makes. We were making the case that, you know what, it seems like the lows are in for Bitcoin, and that is quite the understatement because it had one of its best performing weeks in quite some time. We're going to talk about that. Crowdstrike also on Friday. Good job taking down the internet and causing a lot of havoc out there. We're going to look at some of those stocks as we prep for big tech earnings on deck next week. We got lots to talk about. Stick around. Here we go. Okay, we've got some charts in front of us. Warden TC2000, that is a charting platform we're using throughout this video. It's a platform that we support here at the Trade Risk. So if you are a user of Warden TC2000, check out some of the goodies we have on our website. If you're not a user, we have a coupon code that I believe is still active in the description of this video. Get access for your first month, basically free, and see if it's a good fit for you. All right, let's get into the numbers here. The action on right-hand column here, 1 week returns. You can see a mixed week, which speaks to the kind of split market that we're seeing here. We had the Dow Jones up 0.66%. We had the S&P down 2%. We had the Nasdaq down 4%. And then we had that outperformance out of the Russell, 1.72% to the upside. Russell certainly gave back some of its weekly gains, did not close at its highs, but still managed to outperform by a pretty wide margin the rest of the indices. Take a look here at the 1 month returns. You can see it's basically a mixed kind of bag here, around flat or up 1% or down 1% over the past month. Meanwhile, you have the Russell 2000 now, which is up 8%. Now look at the 1 year returns and you start to see that spread, that catch-up trade that the Russell 2000 seems to be trying to put on right now. If we take a look at market volatility, everything was up this week. And I think, you know, to me, that's a good thing. As a trader, I like to see a little volatility. I like to see the small caps moving up. This is my kind of environment. This is where I think traders, stock pickers can actually find more opportunity. And we're certainly seeing it here this week with the VIX up at 16.5. We'll take a closer look at that in just a little bit. So if we take a look here at sectors, you can see, again, pretty mixed. It was energy, real estate, financials at the top of the list here, up anywhere from 1% to 2%. On the downside, I mean, it was really technology suck and win this week. It was down 5.5%. It's now down 4.5% over the past 1 month. And it is the only sector now over the past month that is in the red, firmly in the red to boot. So there is a clear sort of rotation out of technology, which has been such a strong area in this market year to date and frankly last year. Consumer discretionary utilities also down this week, 1.5% to 2%. Let's take a look here at our sector trends. Last week we spent some time looking at individual sectors, right? We talked about some of the sectors that were looking good, looking set up for some type of move. Lots of those sectors did find that follow through. If we take a look here at some of the changing of our signals here, this is our custom indicators, our smart trend filter indicator. It's for TradingView as well. So if you're not a Warden TC2000 user, you can also get this on TradingView. But we saw a sell signal produced here for XLK. So for technology, we finally saw enough weakness here on Thursday. We printed a sell signal. This is our first sell signal here basically since April, May time of earlier this year. So we've had a very nice kind of a clear uptrend in place. In terms of other new fresh signals, I mean, we had some new buy signals down here in consumer staples. Same thing with utilities, even though they ended the week weak. We did get that buy signal there. And these are all on the daily chart. Energy ended up turning up nicely, and real estate as well. So you're getting a little more expansion, a little more of these sectors that we highlighted last week, starting to get some rotation and some love for the first time in quite some time. Now, if we take a look here at market breadth underneath the hood, take a look at Thursday's, sorry, not Thursday. This is Tuesday's action. Tuesday's action, 52-week highs, 52-week lows. Take a look at this bar over here, and let's zoom it out, zoom it out, zoom it out, zoom it out. This is one of the strongest breadth thrust or number of stocks hitting 52-week highs on this chart going back to 2019. So we don't have a tremendous amount of data here, but certainly looking at the last 5 years, we saw a flurry of stocks hit 52-week highs earlier this week. That is unequivocally bullish underneath the market hood. That's what we want to see. That's what we were waiting for quite some time, as things were very sleepy and stagnant and sideways and choppy. Now we're getting some clear breadth signaling here. Again, every charting platform is going to be a little bit different in terms of the actual number that is reported, but I think in pretty much all platforms, you should see that nice strong spike and clear kind of push above any recent highs. So that was encouraging. We clearly dried up a bit here into the end of the week, but on a cumulative basis, pretty strong underneath the hood. Now let's take a second here and thank our sponsor, Investors Business Daily, for helping make this show possible. This is their IBD 50 list. This is the top 10 of their IBD 50 list. And you can get access to this list with a link in the description of this video on their IBD digital subscription. You can see had some big winners, had mostly losers this week on their top 50 list. That makes sense. Growth list and growth tech kind of heavyweight getting hit this week. See HUT at the top, Clean Spark at the top as well. Those are some Bitcoin miners, which we've been, pretty hot on as well in terms of Bitcoin miners and the opportunities there. So check out that link in the description to get yourself access. Now, speaking of Bitcoin, here we go. Top of the list on commodities here, up 16.89%. That is the IBIT ETF. We're going to talk about that a little bit later. We also had the dollar index up this week, and that was putting pressure on pretty much everything else. It was kind of tough out there. Gold ended up giving a lot of its early week gains back. Crude oil was down, ag was down, silver was down, copper was down, natural gas was down. So it was a little bit painful out there in commodity land. So we're going to talk a little bit about that later. And if we take a look at treasury yields, we started to get this flare up here into the end of the week. Generally speaking, we are still in this series of lower highs and lower lows across pretty much all the maturities here from, short term to longer term. But we did start to tick up a little bit on Friday and Thursday, so we'll have to see if anything comes of that. Now, let's get into some price action analysis. We're going to kick it off here with the S&P 500. We're going to start off with a weekly chart. So here's the weekly chart of the S&P 500, and this week here is what I would call a week to take notice, okay? We had first the heaviest volume that we've seen all year long in the S&P 500, or pretty close to it, right? Depending on how this finalizes. I'm recording this pretty close to after the close. Sometimes these volume figures change, but one of the highest volumes that we've seen this year, and it's coming on the downside, right? It's coming on a reactionary move where we rejected all-time highs, reversed and closed weak at the lows of this week's range, down 2%, okay? So this is certainly a week to take notice. And if we look back to April of this year, all right, let me go down to a daily chart real quick, and let me throw on custom indicator. I think this is the one. So daily chart now of the S&P 500. Let me clean this up. This indicator on the bottom that I just threw here is a 52-week high drawdown, just looking at magnitude. And so if we look at the April to May correction from 2024, the S&P 500 had a drawdown of 5.63%. Okay, that was our biggest drawdown this year. So it's been a very mild year. S&P's up like 16% on the year, and we've only had a 5.6% drawdown. It's pretty, that's pretty constructive. So if we even just project, right, not predicting, but project what that would look like if we had another 6% correction that we just started, that would get us down to about 5,300, right? And if we had a 7% drawdown, which I don't think is under, you know, out of the realm of possibilities here, we'd essentially come back and retest these April highs on the, you know, on the S&P 500. So if we take a look here at a weekly chart and we think about, you know, just where we could come and where we might be able to trade down to if this correction gets some more legs, it's not unreasonable to me to see a multi-week correction take place of a 5 or 6 or 7% magnitude to come back down and retest these April highs, and we would still be in a very healthy uptrend bull market, and we could finish the year strong. Of course, we get elections later this year and some different catalysts on deck with Fed and all that stuff, but generally speaking here, this weekly bar feels like it's not done. Okay. Daily chart in the short term, maybe we have enough washout here where we could start to float next week, right? I wouldn't be surprised to see a reactionary day up or two, totally reasonable here. And then we kind of move sideways and perhaps leg down again. That's kind of a relative path that I'm thinking of here. But again, I don't want to necessarily get doomsday bearish here. I still want to be looking at this market as opportunistically, you know, buying on dips or adding exposure on dips. I think it's still a healthy market, especially with some of the breadth work we just talked about and the Russell 2000. I think you just now are in more of a stock pickers market, right? I think this is ultimately a good thing. I think you're going to get more stocks perhaps participating in the next month or two, as perhaps some of these big mega caps cool off a little bit. We've got earnings next week, and we'll start to get Tesla. We'll start to get, I think, Alphabet or one of the other Mag 7 stocks. So we're gonna get some cadence from the market here, or companies, I should say, and we'll see how the market takes those earnings reactions. But right now we are in a bit of a pullback mode. On the daily, we have clear, you know, kind of support down here on 54.50. This is where buyers kind of stepped in. We went sideways for some time. So, you know, maybe it is another day or so. Maybe we slam down on Monday and then initiate, you know, start to bounce a little bit and go sideways and kind of wait for some of these earnings. But for the S&P 500, I think you got 3 good days down in a row, washing out a little bit of that momentum in the short term. And let's pay attention, right? Let's chisel down on your time frame. Everyone watching this is going to have a different time frame. So what it means to you in this correction and this pullback is going to be very different from one trader to the next. But for me, I still want to keep an open mind. I'm still looking at this market as glass half full. I'm looking for buy setups, but I'm certainly aware of the fact that we might only be a third of the way done in this broad-based correction. Okay, that's kind of the way I'm looking at it. Nasdaq 100. If we look at this chart, remember last week, we looked at the Nasdaq 100 and our thought was this was the day to take notice, right? Just like we have a week to take notice of, we clearly came out here last week and said this was a day to take notice. And the thought process I had was, it feels like the top is in, right? And that's exactly what we said last week. It feels like the top is in for the Nasdaq, and I wouldn't be surprised to see us trade between 475 and then these highs through earnings season. And we're here. We're already at 475. So we're at the lower end of my last week sort of projection, if you will, or you know, high probability scenario. And again, I think similar comments, the Nasdaq 100 definitely looks a little bit weaker here. There's been more aggressive rotation out of this area, and this gap, you know, just clearly opened up on Wednesday. They didn't even attempt to fill it. We just kind of sank on Wednesday, and we've just been, you know, continuing to build on the downside on increased volume. So once again, I think Nasdaq 100 short term is in the penalty box. If we look at it on a weekly time frame, once again, I'll say the weekly bar here is a week to take notice of. We had you know, basically follow through, and we had our little transition candle here last week, and it feels like the Nasdaq once again could open itself up to a multi-week pullback. And still, again, it's up 16% so far this year still, right? So a 5, a 6, a 7, and 8% pullback here doesn't seem unreasonable. If we look at our drawdown measurement here for the Nasdaq 100, once again, you can see April, it was about 7.65% for the Nasdaq 100. So let's just play that scenario out in our head. If we go, 8%, that brings us to about 461 right in here. Resets us to basically the beginning of June. And if we get more of a 10% correction, then you're looking more at the April highs. All right. So let's keep an open mind. There's definitely been a little short-term damage here. There's some rotation. Time frame matters. And I think you got, some stocks to pick from. Russell 2000 clearly now is your kind of leadership here over the recent month. As we talked about, we had the nice breakout last week on Friday, right? We talked about the fade on Friday, but we said, you know what, we're still going to give the benefit of the doubt to the buyers here, the breakout being underway. And we had some aggressive follow through on Monday and Tuesday. Tuesday was one of those highs in breadth that we talked about earlier. And now you're getting a nice pullback here. So it seems like, you're getting some profit taking. You're getting a little bit of a reset from this sharp move where the Russell 2000 was up 12.5% in 5 trading sessions, which is basically a year's worth of gains in 5 trading sessions. And so now it's cooling off a little bit. And so I think this is the spot to watch. Some of these other sectors that we talked about are the places to pay attention to. And you have a lot more stocks involved in this subset than you do in, the top 50 Nasdaq 100 stocks. All right. So that's kind of the way I'm looking at it. If we take a look at some other markets here, I want to look at the VIX. So the VIX here jumped this week. Once again, from around 12 or so is where we've been hanging out in the VIX. And we had, basically a 4 or 5 point move up to about 16.5. Nice, kind of good fear level, right? Getting a little bit of protection in there. That's good. That's a nice shake up, right? Nice to see that every so often. And so we're seeing it now. And so, yeah, I think it's good that the market's got a little fear in there. I think it's doing the work. Let's go to Bitcoin next. I want to talk about Bitcoin for a little bit. So last week, right, as we said at the top of the show, oh, what a difference a week makes. We were down here. We were trading sub 60, 56K, 57K. We were trying to hold on to these May lows. And our analysis at the time last week was, look, I think if we're above the May lows, I think we give the benefit of the doubt that the lows could be in, that the buyers could step in here. But if we start losing this 56 area, then we're in trouble, right? That's kind of what we talked about. Saturday, of course, we had the attempted assassination of Trump. We had his recovery. We have more endorsement coming out from President Trump. We have the market pricing in probably a greater likelihood that President Trump is going to be the winner this year come November. We had Germany sell the rest of their Bitcoin holdings that they were out in the market selling. We had our first distribution of Mt. Gox coins that got sent out to creditors, and I don't think the rest is out yet. But we had just a series of kind of catalysts or worries dissipate over the past week, and price is reflecting it, right? Price is clearly skyrocketing higher here off of these lows, and it is in chase mode, right? Bitcoin is one of the few markets that moves up faster than it moves down, right? If we take a look here at this last correction down from 72K down to, this 55K, this was a grind lower here, right? This took a little over a month, and now we've retraced 70% of it in about, a third of the time. So we're up here around 67. We're in full chase mode. I put out a tweet this morning as we started to break over in the IBIT, as we started to take out Thursday's highs. I thought that this was really suggesting that there are lots of folks off sides here. The flows are strong, and 70K is probably coming quick. And so when I look at this fierce move, the big gap up, the hold, the shallow consolidation here, and the fact that we, kind of ripped higher here on Friday, this seems like Bitcoin wants to aggressively get back to the top end of this range in very fast order. This is full on chase. I think lots of folks are flat-footed here. I think lots of folks were looking for another leg down into the 50s, and we're perhaps looking to buy lower or short this down into the, you know, again, new recent lows, and it just totally flipped and we're in full on chase squeeze mode. So, Bitcoin looks good. I have a position here I was adding throughout this week. Our official Galahad trading system does not have a position in this yet, right? So our Galahad trading system exited Bitcoin around 65K. So it is not back in this yet. It's possible next week, though, it would start to reinitiate that trend position, but it's not there yet. Me personally, I have increased exposure throughout this week and I'm looking for higher prices. So I do have a position here and looking for more. So there's clearly a nice move here, and we'll see how this all shakes out into the weekend. So congrats to those catching that move. You had to be quick and on top of it. And let's finish off this week's video with the Crowdstrike analysis. So Crowdstrike here falling 11% on Friday after its its software release that took down airlines and hospitals and trading brokers. Schwab, I know, was down for a lot of Friday, and so there's probably going to be lots of lawsuits and pending investigations on what the heck this is, what happened, and how to prevent it in the future. But all that aside, stock's down 23% from its 52-week highs. 52-week highs were made just a few weeks ago. Weekly chart, weekly chart here, you can see kind of coming back into support, longer support here, the April lows for the stock. If we go to the yearly, just to see, it's up 20% this year now. Obviously, it's just lost quickly a lot of its yearly gains, but it's still up 20% year to date. Technically still in an uptrend here. I don't know how this all shakes out. This feels like there could be some overhang on the stock. I don't know that this is a very clear cut buy the dip scenario. I think there's just more questions here, and we need to see how everything gets followed up. I will say, like, if we look at HACK, so the hack ETF, the cybersecurity hack ETF, we take a look at some of the other candidates in here. So you got like CHKP, right? Holding up pretty well. You got, of course, Palo Alto, which, held up well today on a longer basis. It's not quite at its highs. But if we go back to that HACK ETF, we look at the weekly chart here. I mean, it's a pretty nice looking weekly chart, right? You had a nice correction throughout 2022. You saw some nice accumulation into these lows down here, and then you got all the way back up towards highs. I mean, it looks like a nice little kind of, upper level base being built out right now. And this looks like potentially a reasonable buying opportunity, more so on the broad base sector, right? Or the industry itself. All right, so I think that is about all I have today, and I will leave you with, let's take a look at our industry scanning here. These are the sectors that were showing up on our up and down weeks here. I'll let you look through the results, but these are the notable bearish sort of list down below, and then the only thing on the upside that was showing up here is utilities and the regulated gas industry. All right, so that is all for me. Hope everybody had a okay week out there, survived a little bit of turbulence. It's fine if you get some nicks on yourself on these types of weeks with the rotation and the sudden change of character, but hopefully nothing too bad. A little bit of a shakeup, I think, with small cap starting to work. I think this is setting up for a nice environment for traders, or at least that's the hope at this time. We'll see how things progress. So as always, thank you so much for tuning in every Friday, our long form analysis just like this. We've got links in the description of this show to our TC2000 products and downloads. We also have trading systems. We have our IBD link down there, and we have our Warden TC2000 referral link in there as well. So check those out. Have a great weekend. We'll see you back here next week. Take care.